Good morning, everyone. It is Tuesday, January 24th, about 8:36 a.m. And let's get started. Every day for the last few days, I kept saying I was going to start with news, and for some reason, I forget. So here is the news for today. We have 9:45, 10 o'clock combination of numbers. I don't think this will really slow down trading prior to it. I mean, something major would have to come out with one of these numbers for it to have a huge effect, but anything is possible. So uh, basically, what we need to remember: 9:45, 10 o'clock. Um, we'll look to see if there are any major spikes in price action. If there is, we'll kind of have some idea as to where it came from. But I wouldn't be too concerned about being out of the way of out of that news. More so at the 10 o'clock than the 9:45. Let's take a look at our homework chart and see what happened yesterday. All right, so yesterday we opened with a large gap down. We were looking for some type of trend day yesterday, but we were looking for it to go to the downside. So we kind of got a little bit about what we were looking for, except the opposite way. With large gap downs, if you remember, well, I won't get into it just yet. We will talk about what we did yesterday fairly briefly and what we can take from it. But so we opened with a large gap down. We did have pretty much a trend day, with the exception at the very end we came right back down towards VPOC, pretty much closing right on VPOC. So slightly skewed to the upside, fairly balanced day. Not a great bell-shaped curve here, but no real obvious low volume area in the middle. So the value area seems to be fairly well developed, so to speak. And currently we're trading 53.10. Okay, so right now we're trading up here, and we'll get into expectations and hypotheses and all that other fun stuff in just a little bit. So, one second. Okay. So we take a look yesterday. We opened up. We tested overnight low, and overnight low held fairly nicely. Came down towards this composite VPOC, this former VPOC here. And that became the turning point. We never really got a turn back down in the day. We did have a pullback. You can see we pushed all the way up to this previous high, came back down, way down here. Wasn't in front of the market at that. It wasn't in front of the screen at that time, so couldn't really tell you what it looks like on the 610 tick chart, which we'll look at in a minute. But ultimately, we ended up pushing the entire day, almost getting into the low of Friday, which we never actually got to, and then turned back down. Like I said, we closed that VPOC. So just a couple things we're going to do to this chart. We're going to get rid of this swing here. We're not going to get rid of it yet, actually, because we traded above it. That failed. We traded above it, and it held, but then it became support. So we are going to keep this here for now. We'll see what happens with this level. That's actually going to be true of every swing that we have up here right now. None of them were broken and convincingly held above. I mean, this has, which is why we're looking at it as support right now. So for now, we're going to leave these on here. Let's take a look. So from yesterday, let us plot out our swings. And remember, swing prices are going to be dashed lines to make it easier on us. Okay. So let's begin. Let's take a look at what happened overnight. I'll get this set up for us for the expectations. So first thing we're going to look at is where we closed the session. So you can see it here. Let me see if my little drawing tool is working right now. Give me 1 second. So here, yesterday's close. Okay, so right around there. And what we're going to look at is we're going to see how much trading happened above and below that price. To determine whether or not inventory is long or short from overnight. So let's see here. Here's yesterday's close. Definitely majority of the trading happened above the price. We did get a little bit of trading below the price, but overall we are net long inventory, which from the context, what that does for context, and we talked about context yesterday, and there is something we could take away from yesterday, but again, I'm going to hold off just for a minute. But so right now it's a net long. We're going to keep that in mind when we do our hypotheses. We are also going to draw in our overnight high and overnight low real quick. And granted, it's already on the chart, but remember, we do this because we want this information to get spread across all of the charts that we're looking at, and then we can just go back and delete the ones from yesterday, which we should do. Here's one. And there's the other. Now if I come back to now, real time, here's our overnight high, here's our overnight low. Okay, so that's been transposed onto the chart. Let's take a look if we can. Let me see what time it is here. Okay, good. Let's take a look at what we did yesterday. Yesterday, you saw one of my classic mistakes. It is the actual trait that I'm working on the hardest to correct, and that is dealing with boredom in trading. I've gotten much better at it. That's probably the first time I've done it in weeks. Not probably. That's the first time I've done it in weeks, so that's great. But the fact that I do it at all is bad. It's a mistake that should be completely eradicated. So let's look at it. Let's try to learn from it. I have no problem with showing you guys my errors if it helps you guys become better traders, and ultimately it certainly will help me become a better trader. So when we opened and we pushed down to the overnight low, which yesterday was right here. We pushed down to the overnight low. We broke below it, but then we turned right back up. You can see this little swing. This is now yesterday's low for the most part. Looks like I'm off the tape here. I should fix that. Okay. So we push down below. We create at the time the low of day, and we're gonna stretch this out a little differently so we can see the BBs as well. Okay. Create a low of day. Don't really have any divergence down here when we get there, so there's no real obvious long opportunity. We start coming back up, and now the context that we were looking at and what ultimately won out, in my opinion, was the fact that we had such a large gap down. I was looking to see if we would continue down in that trend. The variable that won yesterday was the fact that we had a net short inventory. We are traded above the prior day's close. Let me show you to try to make that make sense. So I'm sorry, net short inventory. We were traded below the prior day's close. And you can see here, right here. This is yesterday's close, and almost all the trading happened below that point. All this down here, right? So we were very much net short. And we had talked about in the beginning of the trading day that one of the things we're looking at is we're looking for a snap back to try to correct some of that overnight inventory. And we got this tiny move here at the open. Right here when we opened, we got a quick push down. We actually were looking to take this trade here. Hesitated on my part. Came up to overnight VPOC, which is again an area that we had talked about that we were going to expect to come and test and then push away from. So that actually set up nicely, but I was expecting it to go further down. Now, ultimately, when we start holding this overnight low here, we have some reasonable trade opportunity here. using this daily low as a stop loss. I did not get into any trade here, and that I'm actually okay with. I'm okay with not taking any trade here. There's really no clear cut setup for me. There is a breakout pullback for a long, but it's not happening after a trend. You know, the trend here is down, so this kind of breakout pullback. I'm okay with not being in that trade. The where I'm not okay with, the part where I made my boo boo and looking at this looks like it would have happened right here, is as we're now pushing away, I need to throw out the bias that we're going to push down, meaning I shouldn't get into a trade overly aggressively because I believe we're going to push down. I still need to be looking for a setup. So, you know, here we have a clear break of the VWAP. The VWAP had actually been respected up until that point. You could see we came through it and we tested it, it held, tested it, it held, tested it, it held. We finally break, tests, it holds, tests, it holds. So the VWAP had been starting to get respected at that point. So we have a clear break in the VWAP with we're now shifting up. We have positive momentum in the BBs, nothing to show any type of divergence as we come to what at the time was the high of day. So there was really that's just a bad entry on my part. So, you know, now we've pushed through, we've gotten to this previous swing, and now you start seeing your first potential setup. So we get to it, we push above, we come back down. We started talking about maybe looking for a head and shoulders pattern, but now we have divergence on the 610 from here to here. Don't have a ton of it on the 987. Don't have any of it on the 1597. You certainly could have taken one position here with the anticipation of scaling, all the way up to here if we continue to get divergence. So now let's see. So we push down. I should tell you, I really didn't do much of this review before. I took a quick look at the chart, but I didn't get into any sort of detail here. So now we have divergence from here to here. We actually, I wonder if this would have been, I guess it all depends on where you would have been trying to get into this trade. You have a 14 tick move from here to here. So depending on how you entered, you might have actually had enough here for your first profit target. But we do have some divergence here. Now, remember, the idea is that ultimately we're going to look to see to scale in all the way here if we get divergence. And as we make that move up, we do not continue our divergence. Now, let's take a look again. So we push down, we come to VWAP, we trade around it, so I'm not going to call that a hold. Come below it again, push up, push down. At the time, this is middle of the day here. Okay, so we test middle of the day, we form a nice little bullish candle here. But let's take a look at how this looked from the perspective of the BBs, right? So at this point, you actually look like you're not going to have divergence when you get to your new high, or when you get to the existing high a day, and you don't. So you could have been looking at a long here. This honestly for me would have been kind of tough. I don't know that I would have been able to break my ideology of looking for a push back down. So I don't know that I would have taken this. I would have been more likely to be trying to scale all the way up into here. So ultimately, if I was doing the scale for a short, I would have been in all my contracts, and I would have been out of two or three, two for sure, with the third at a stop at a break even. But you know, this goes 25 ticks in my favor, so that's certainly going to be out of two, and I don't know where the third would have been. But now what we start seeing is that we're starting to get above some of these levels and hold above some of these levels. So now we would start watching for potential long opportunities with large enough pullbacks like here. You know, so you have your IB high, swing, and overnight high. Now you start having confluence of, sorry, I don't know, sorry, that's not yesterday's overnight high. Sorry, overnight high is way above us. Never mind. So disregard this orange line. This right now is the current overnight high. So forget this for now, please. So you come down, you have IB high, you have this previous swing. Now you're starting to form, and here you form a nice little pattern where you test IB high, come off of it, break it, come back up, test it again, upside down head and shoulders, inverted head and shoulders, where you push, come up, push, come up, retest almost exactly the same price point as you did here to here. Nice trade set up there. Nice trade setup there. Stop loss would be below VWAP in the middle of the day. And again, the BBs are all screaming positive right now. So you're not looking to take any shorts as you move up here. Something would have to change in order for that mindset to change. So we push up, get to these two swings up here. So we have a couple of them. This one is yesterday's high, so disregard that for now. So we have a couple of swings up here. We push all the way up to it. No divergence, not looking for a short up here. Now we come down and look at how nice. Look at this real nice divergence from on the 610, on the 987, on the 1597. Every one of these great trade entry here. And then as far as, well, it just goes straight down from there. So that would have worked out nicely. But let me just make sure you guys see what I'm talking about. Price here, although there is a slight decline, it's pretty much a test of the overnight high. However, if you were to take, let me just make it a little more obvious here. This same time frame here, you're looking very sharply down on all of these. So this is a nice trade entry there. Oh, I just realized my red mouse isn't on. So yeah. There we go. So that's pretty much how yesterday played out. Like I said, you saw me make some mistakes. I have no problem. I don't want to use the word happy, but I'm okay with sharing that with you. I'm not. I have a long way to go in my trading. Get back to where I'm comfortable, where I used to be, and I'm hoping that in my travels, as I start to learn things better and better, I can transpose them over to you guys so that you guys can use them as well. That would be a very nice thing. All right, so let's take a look at. Oh, let's take a look at this. What is this? Okay, so we are currently opening right here around 53.15. Let's draw out some expectations. So we have a slight gap up, nothing major. I would expect this gap to be filled fairly quickly. And let's take a look. Let's use that as our first expectation where we come through these levels, probably chop around a little, get back into yesterday's range, and start making our way down towards VPOC. We have a pretty good void in this area here from 53.05 to about 52.90. So we'll see. You can see how quickly we move through that price level yesterday, up and down. So this is going to be expectation number one. Expectation number two is going to be where we, again, fill the gap, chop around, trade above. This holds as support, and then we drive up towards microcomposite VPOC and all these other levels here. This holds. We get into some choppy trading here, and then what we'd be looking for is a break above, a hold, and then we're coming to test this previous swing, which also coincides with this composite VPOC right here. So this is going to be expectation number two. Expectation number three is going to be where we open, drive up, get into some chop here, fail, hold as resistance, get into some chop here, fail, hold as resistance, and then we're back towards heading towards the VPOC. That's number three. And number four. And remember, well, let me draw it out first, and then I'll tell you my spiel. Number four is going to be the same idea, but we drive, chop, break above, hold as support, head towards here. Now remember, what I'm drawing out basically is first hour's worth of expectations. Truth be told, as the day progresses, for me, I start using the dynamic references from the day. Now, the dynamic references, if anyone is familiar with James Dalton, he wrote books about market profile. He refers to dynamic references. So a static reference are things like overnight high, overnight low, yesterday's high, yesterday's low, yesterday's close. These are levels that don't change at all throughout the current day. Dynamic references are levels that are generated throughout the day and can potentially change throughout the day. So initial balance, the first hour is high and low. That number continues to change until you close the first hour. The VWAP, although I know he doesn't really pay attention to that, but the VWAP, the current day's point of control, the current day's volume point of control, value area high, value area low, all the levels that happen throughout the day that could change throughout the day. So let's turn this off. I know I keep saying that ultimately I want to start looking at the ES2, and I really do. But one of the reasons that you don't see me rushing into it is because part of what it is I'm working on in my trading, it doesn't matter what contract I'm trading. This idea of discipline, not trading because I'm bored, none of that nonsense. That all needs to be cleared out before I start worrying about where to go next is as far as trading tools. So, excuse me, we're opening right above yesterday's high. 2 minutes to the open. We're opening right above yesterday's high. Quite a bit above from unchanged, a good 40 ticks away. This is one of those areas that you remember the other day we took an immediate short, if I remember right, because we were right up against the overnight high and we had levels above us, and inventory was net long, so we were expecting a correction. So in our case, again, we have inventory net long. We're close to overnight high, but the reason we're not taking that trade today, now we might make a trade if we see a quick push up to overnight high and a slowdown. We might take a short trade using these areas here as as a stop. Here is not somewhere we would scale. We would be into our entire position pretty much between here and here, if not entirely here, depending on how it sets up. This is way too big of a stop area. So the reason we're not taking the trade right off the bat is we're kind of in a congestion of levels. Now we do see a lot of lines on here. We could probably clean that up. I can go back and eliminate one or two of these so that we don't have as many on here as we do right now. But that's okay. This is certainly an area that we can look at to potentially act as support or resistance. So just as a quick potential opening trade setup, we are net long. So I would expect to see some type of correction. So what I would love to see right off the open is a push to the overnight high, a failure, a decent candle setup, or a slowdown at the least. Give us a chance to get into our full 3 contracts, stop loss above here, and then try, see if we can't get a push down, even towards overnight VPOC alone. At that point, would be good enough to close out some of our trade. But short of that, that's really the only thing I'm looking at as one of those real quick, immediate opening of the day setups. And I'm not going to force that issue if it doesn't happen, which it didn't. We're just going to kind of wait and see what sets up. Oh, also all those software, all those software glitches I had yesterday, I fixed just by removing the indicator and then adding it back on. So there was a lot of fake lines on the chart yesterday. Those fake lines didn't cause any of the mistakes I made. Those mistakes were made because that's just what they were, mistakes. But those lines, it looks like this will now be acting properly. All right, so we open, quick push down. Just get this chart. All right, so let's see if we chop around here a little bit and ultimately try to drive lower down to here. No chopping, just pushing. So the gap was closed pretty much immediately as we expected. So just kind of hanging out. Let's see what happens. That's interesting. Okay. So push back up, still kind of stuck in this area here. Little divergence right now at the high of day. A little too early though to be acting on that. Divergence only in the 610, 987, very very slight, but it's there. 1597, no divergence at that point. So we're gonna wait to see if we get a push up to the overnight high here. So just kind of stuck. Never made it all the way down to this swing here. I really no reference level to see why it turned here. That was a nice push, 25 ticks. All right, coming to overnight high. No real divergence. Don't want to just throw a short in here now. Gonna look to get some type of. I would like to see divergence on the BBs, but if not, at least some type of candle setup. I don't want to get ahead of myself on a trade again. I don't just want to turn this into a trade because I believe that since we're net long coming to overnight high, that ultimately we're going to have a chance to go short. What we're going to look at this point, however, because we don't have divergence, we are going to start watching for some decent entry opportunities for a long down here, using yesterday's high, middle of the day, and VWAP as potential entries. Because we don't have negative divergence, or at least, well, certainly don't have any of them at 1597. Very, very minor on the other two. There's nothing to say that this won't continue to push up. So if we get a good enough pullback, that gives us more than enough room to get into the trade and have our first area of profit target, our 10-tick profit target. Excuse me. Very choppy. That quick drive down, quick reversal up. If somebody saw something on there that kind of gave them reason to be in those trades, that's awesome. I didn't, so I'd love to hear if someone saw something that I didn't see. But at this point now, it's really just we almost kind of got to wait for the next move to see where it wants to go. remember, the longer we stay in congestion, it's like the coiling of a spring. The longer we stay in congestion, generally speaking, the sharper the move out of it. This is not a long time, but you could see it like back here. We were in this area for quite a while, and the push up was nice. It was 40 ticks. Starting to form, obviously, this consolidation pattern here. Still like the idea of trying to get long on a pullback. Keep in mind, net inventory is long, so the variables we're looking at is A, open drive down, did initial drive, failed, pushed back up at high a day, failed, and right now we're just kind of chopping around. Actually, I probably should be sitting on my hands here because you have very conflicting information there. Net long near overnight high in this swing definitely lends itself to a potential short opportunity. This pullback here, if we can get down towards middle of the day, yesterday's high and some of these other swings in here, gives us the potential for a decent long. But we would like to see a setup. I don't want to just throw a trade in there. From middle of the day, 53.12 to high 53.26 is only 14 ticks. So if you got into a trade at mid, it would have to almost come and retest the current high a day in order for you to hit your profit target. So really not enough in here just yet to want to jump onto a trade. You can see the 610 is starting to roll down. 987, all of them are starting to roll down, which is lending itself to a potential setup of a pullback up to the upside, a retest of the high a day, potential test of the overnight high with some negative divergence. You don't really have a lot of it yet. You don't really have much negative divergence yet. Okay, so down to VWAP, down to mid. Real slow opening today. Again, with the exception of those first two quick moves, which ended in areas that I really couldn't give you a reason why. The fact that this ended at the overnight value area high means nothing to me. Oh, we're going to check to see what the volume difference is from overnight sessions versus the regular trading hour sessions in just a minute. So right now what I'm watching for is to see if VWAP's going to hold. If we can get a decent candle setup around here, I would be willing to take a long. As of right now, that is not the case. Yesterday, the overnight inventory definitely is ruled the day. Now, I'm not saying that's why that happened, but the fact that it did happen and we had overnight inventory short and it corrected itself, that's something that we really want to be paying attention to. I know that is something that many people pay attention to. And remember, that's why a lot of this stuff works. With the exception of when these higher time frame traders step in and they just move the market, it's the other than that, a lot of the reasons why these technical analysis, overnight inventories, volume profile. Well, the volume profile is a little different. Volume profile works because the science behind it, but a lot of these other technical analysis ideas, they work because everybody's paying attention to them. And the overnight inventory, it makes sense. You got a lot of people overnight. Generally, people that trade overnight are the weaker weaker traders, and which means for the most part the larger traders are going to take advantage of them when the market opens. So if their overnight inventory is long, they're going to force those traders to make decisions, get out of their trades, drive prices in the opposite direction, and give the big boys a better opportunity to get into positions. Notice we do not have any positive divergence towards the low of day. Okay, so from where we were to where we are here, no positive divergence. We are now, and the reason. So we obviously we did not get into any trades yet. We didn't really have enough room or enough reason as of right now. At this point now, what we're watching for is, will this turn back up and find resistance here? And if that's the case, now we are potentially setting ourselves up for our first decent trade opportunity. And the reason for that would be is, well, maybe not. But if this turns up and we do get some type of resistance, we do get a decent setup here, and we do decide to take a short, we would probably be looking to get short a larger amount of our contracts because our stop could be right above that swing. We could also look at it as a scale in, but honestly, right now there's just not enough going on. There's just not enough going on to want to convince us to get into any type of trade. Hardest type of trading for me is exactly what's happening right now. Staying out of trades, not over trading. Second hardest type of trading is this exact same idea, but stair stepping in one direction or another. I prefer it be in a channel like this. 27 tick channel is just fine if we get some setups on the extremes. This turned quickly. I won't say this turned quickly, but this didn't give me anything to work off of as far as a trade entry. Maybe I was wrong. Maybe it's slow. Maybe it's slow for waiting on some of that news coming out today at the 9:45 and 10 o'clock. I don't think so, though. While we're doing a little bit of nothing, let's take a look. Let me just stretch this out. What I'll do is I'll put on some information for us, and we'll take a look at what the volume was overnight. Okay, let me see. So, okay, this is this one. So the overnight volume $139.2 thousand. Looks like that's overnight. Versus 227.8 thousand. So it's about half, a little more than half happens overnight and during the day. That's actually more than I expected. But I guess with crude, that's not all that surprising because crude can trade overnight. It's something that the whole world watches. Here comes a test of current low of day. Don't see any divergence here. At this point, we would be watching for an opportunity on a pullback short. Ultimately, we're still expecting this will be the first area that we expect to get to test this swing. Beneath that, you have the 5278, which is yesterday's VPOC. Sorry, 76, which I should draw it in here. All right, so good job so far staying out of the trade here in the middle. As we pulled back, we had talked about potentially starting to look for some long opportunities. Nothing set up. We didn't just go in. We didn't just go in based on price. Although if you did start taking trades there, you would have scaled all the way into where we are right now, with stop loss being below the overnight low. But we did, again, no one's gonna trade the exact same way. So I try to do my best to tell you what it is I'm looking at, and if I can at least explain the concepts to you, shit, for all we know, I'm looking at them wrong. You might look at them and say, no, wait a minute. This was a clear short setup here. For whatever reason, okay, that's great. I mean, if that's something that you saw and something you can find in a setup like this or in a move like this that gives you cause for wanting to be in the trade, hey, that's spectacular. Again, no negative divergence from current low of day to now. There's nothing to show us here as of yet that low of day is going to hold. That doesn't mean it won't. All right, so we're going to look to see if we can't get a pullback short here. Current low is 52.99. Middle of the day, 53.12. So again, you're only talking about a 13 tick range there. If you were to enter the middle of the day, and we'd have to pretty much come all the way to the current low in order for you to hit your profit target. Fortunately, not much to tell you. I hate silence in when you're looking at trading. I like talking. Well, I like talking a lot, period. But I like talking a lot when I'm trading because it makes me stay focused as to what's going on. And a lot of times you'll hear me repeat the same stuff over and over. Well, I'll say, in a case like today, it'll be okay. So we're net long inventory. We drove down. Oh, there we go. There's a test of quick little push there. Drove down, filled the gap, pushed up, never got to overnight high. For me, no real trade setup here. Drove all the way back down, testing low of day, no divergence. I like, right now we're obviously in it's a short-term downtrend, but we're definitely switched into the mode of a downtrend. Not sure what that spike was about there. Could have been a long liquidation. People starting to get long in here. Put some stop prices right below these two here, and once we snapped below it, it was a quick flush down, running those stops or liquidating those longs there. Still, BBs are supporting the idea of a downward trend. Just awfully tight range. And you can see only 11 ticks, 27 ticks on the move. Bottom to top, top to bottom, same exact 27 ticks. You can see it here and here, but only 11 ticks back in the move. Now, percentage-wise, it's great. It's almost half back, but it doesn't really lend itself to a decent trade setup. because the fear is this. Let's say we get into a short here. Let's see if I can kind of try to play this out. Let's say we get into a short. Let's say we start getting in at the mid. If we don't have a move back quickly, if the move kind of happens like this, what'll happen in the BBs is you would get your turn up to get you into your trade and a slight turn down. You don't know, would that create a positive divergence as this price gets back to low? If it does, flat here, you could get divergence here. So the concern is if I get into a short trade, all right, and let's say it happens at the mid, and I have my 13 ticks from the mid to the low. If that happens, or was it? Yeah, 13 ticks. But if on the way back to the low, we create positive divergence. Well, I'm at that point, I'm not looking to stay in my trade and even potentially expect to test the low. Now I'm looking to turn it around for a potential long entry with positive divergence off the current low of day. So there's just not enough in here. The way this morning is setting up, there's just not enough in here for us to, at least for me, to be trading. Which, by the way, drives me absolutely crazy. Like, this is, this makes it tough. Patrick, you got your mic on? I just realized that you are in here. So again, just kind of waiting. You know what we might do? We might change, instead of having 610, 987, and 1597. See, the number of ticks in these little charts here, that determines basically the length of time. It's kind of like having a 1 minute, a 2 minute, and a 5 minute, let's just say. The 1597 is almost triple the 610. The 987 is 1.5 times. I think what I might do, I might stretch it out further. We might make it be 610, 1597, and then so a larger number, so that we're getting a little bit of a better representation of a slightly longer time frame. Maybe for now we'll leave it as it is. We do get enough differences amongst the three for now, but might do that. And the way I use them, now, just to point out, I am not an expert in the patterns of these BBs. There's a pattern that actually one of the people who hopefully will have a chance to join us more and more often. There's a pattern called that he calls the heel and toe. So basically, it looks like a foot. If you're looking at it from the downside, it would come down, come up. There's your arch, and then it will go. So here's your heel, here's your arch, and there's a few other ones like that. And there's some more information about these BBs, like when they're trading. Let's see if I can stop that from moving. There we go. When see how like they came from they crossed the upper band to hug the lower band. This actually here, this looks a bit like maybe like an upside down foot, pretty much. But there's some information about these that I'm not all that familiar with. I look at them predominantly for the divergence aspect of it, but I have seen. Oh, here we go. So just real quick, so we've come up to test middle of the day. Again, I'm not looking to get short here right now because we're we started rolling over on the 610. Still pointing down pretty good on the 987, 1597. We're also sitting at the zero line of the 987, and although we crossed below it on the 610, it wouldn't be impossible for us now to come back above it and have the zero line hold. But there's just not enough room in here for me right now. Really nothing. What's nice about the way we do the homework, and someone might look at the chart and say, "Holy shit, there's so many lines. What the hell?" But here's the thing: because we define what each line and each shape is, it's for me. When I look at this chart, it's very, very easy for me to read. I got 3 swings here. The dashed lines are previous swings. It doesn't matter to me, swing high or swing low. Nice push down here from the mid. Sorry. So the dashed lines are previous swings. Dotted lines are previous volume point of controls. Solid orange lines are the overnight high and overnight low. So it's very easy for me when I'm looking at this to know what's coming up, what's not. If you look over at the ES chart right here, dash and dotted lines are previous microcomposite volume point of controls. So once I do my homework and I put my lines on there, I could watch one chart if I really chose to, one time frame, and I would still use the BBs on it to get some type of indicator of momentum. But now you can see, so we have lost our positive divergence down here at the bottom so far. And again, just at this second, you can see how accurate you would have had to have been if you got into your trade at mid 53.12. It came to 53.02, but that doesn't mean you would have gotten filled at your 10 tick profit target. So you see how precise you would have to be if you were in a trade. Now that doesn't mean that if you're in the trade, you might be in it for half the day with no reason to do anything. But that's just not what I'm looking for. So there was a quick little move prior to 9:30. In comes 9:30. We get a correction of that move. Again, these are all minor. I'm only talking less than 10 tick move in correction. But let's open up the ES a little bit. Again, we have not done our homework on the ES. Some of these lines that are on here, I did put on at some point, but I haven't updated the microcomposites there. So please, if you are, not that you would be using my screen to make any determinations for the ES, but certainly don't right now. These are not accurate by any stretch of the imagination. The dynamically created ones here, like this overnight VPOC, that's accurate. That is actually overnight VPOC, but still, I believe in the ES, there's a much bigger difference in volume overnight as compared to okay. So let's see. Overnight volume. What can we do to see that better? 121, 122.1. Let's go back to 1.24 million. It's like a tenth of it. So the overnight volume on oil, that's actually interesting. We might have to pay that a little bit more attention than I have been. Tell you the truth, I was really using the concept from the ES where the overnight volume was so limited. This is 7 goldfish. You could use 8. I think this indicator is now available on NinjaTrader 8, so you could use 8 if you want to, but this is still 7. It'll probably be a while before I switch to 8, unless someone can really show me the fact that I can kind of use it as effectively as I do this. Kind of just staying inside this range and not really giving us much of a good opportunity on either side of it to get into a trade. Like, even though we have a double bottom here, there's really nothing about it that would make me want to enter the trade. And even though again here we test the bottom of this channel, there's really nothing about it. Remember, as we were pulling back down here, the BBs were showing no divergence, slight on the 610, but nothing 987, nothing 1597. So again, for me, I didn't see a trade set up here, and I certainly would not be looking to go long off of this candle because, again, where's it going? It would have to break its previous swing high, which we haven't seen. We haven't seen for a little bit, and if it doesn't, what's the move? 5 ticks. So now we're kind of at a better potential entry point here. Open of the day, although it hasn't really been respected. We crossed through it a couple of times, hasn't really been respected. So we're not just going to use that as a price level, because if we're wrong here, that's a pretty good move up from 17 to 26. It's 10 ticks. We'd have to scale all the way in here. And remember, we'd really want to scale all the way up so that this becomes our potential stop price. So not looking to get short just yet. Now, we do absolutely have divergence currently from high of day to here. Now, remember, as we move up there, those BBs are going to plot new information, so we might lose that divergence. Certainly, the divergence would be more limited as we move up, because as price moves up, the BBs move up. So this is exactly the type of trade I made yesterday where I messed up. It hadn't set itself up yet, but the idea was, as we were pushing up, because ES is coming up to new highs of the day. So we do see a little bit of correlation right now between the two. I wonder why that has stopped. Oh, silly me. Okay. So we do see some correlation right now in the move up on ES and the move up on oil. Just since it's up here, notice there's no negative divergence on the ES as it's coming to the current high of day. This is exactly the short trade I took yesterday. We were coming up. I just decided that up here yesterday in this type of move, it was time to go short. Took that short trade off of not a great signal bar. For those of you that watch second entries, this would be considered a second entry short. Here's your low, your count's at 0. Move up, you break, your count's at 1. Second pullback, your count's at 2. In yesterday's trade, it didn't work out. Who knows what it would do today, but certainly not a trade for me. I don't think I've ever had a morning where I went an entire morning without making a trade. And not because I was hesitant, but because I didn't see any decent setup. That would actually be a first. The entire range this morning right now is only 27 ticks. That's not much. Especially not for oil. ES slowed down, broke high day, then slowed down. You can see that former microcomposite VPOC, that of all the levels, well, you know what, I shouldn't say that. Remember the other day when I restarted Ninja, some of these levels moved, so forget it. Higher day certainly is accurate. Currently sitting right at the opening of the day. As of right now, we've done absolutely nothing for the price of oil. All right, so let's take another quick review here. Opened, pushed down, filled the gap. What in the good world? Filled the gap. Here was yesterday's high. All right, so we opened, came right down through that. The gap was filled. Then we tested a little bit further down, not to any type of price point that to me showed any reason to turn around that. Not that look, the market can do whatever the hell it wants whenever it wants to. You know, we're just trying to find things that give us the slight edge. ES turned down. ES just turned down nicely here. So sorry. So market came down, just turned on a dime, came back up. Not as quick a turn because you turned and then gave yourself a retest up here. But in this retest, we did not have any divergence to speak of for us to try to get a trade on. So we didn't. And at that point, we came back down towards the mid. We didn't take any longs here because there just wasn't enough room. We pushed down to lower day. No divergence, so we stayed out of any types of trades down here. Pushed back up to mid. Didn't take any shorts at this point because there wasn't enough room. Again, made an effort towards lower day. Didn't quite get there, so it's hard to call any of this divergence since we didn't actually get to the low of day, and we don't know what the BBs would have looked like if we did get to the lower day. I'm sure one of the parts of the formula to the BBs is where candle closes. So this candle closing down here or down here would have a much different effect on that BB than the candle closing up here. And now we've drifted our way back up, sitting above middle of the day. Still have negative divergence potentially if we move up to the higher day. We really won't know. 1597 will almost certainly keep its divergence if we were to make that move fairly soon, because that one reacts the slowest. 610 may or may not, depending on how we get up there. Oh, this is a foot. This is exactly what a foot looks like. So you can see it comes down. Here's the arch, the heel of your foot. There's the arch, and there's the ball of your foot, and then it pushes away. That's actually a trade setup that I've seen with those BBs that the Patrick showed me. I don't know if it should be a little bit more smooth, a little bit more rounder, but that type of pattern I've seen over and over again in what he's shown me. You're almost setting up a larger version of one here where you've come down. Now this is upside down. Okay, meaning it would look like this. But that doesn't quite work the same, does it? I guess upside. Wait, so this is the normal way. Upside down should look like that. Sorry for making a mess here. Kind of trying to answer my own question. You can see here where the ES came to the high day. Also, no real divergence. Pull back to the mid. To this moving average here, the 21 bar EMA. But pull back to the mid. Now you're starting to see an attempt to head back up. again, we don't have enough information on the ES to try to make any sort of valid trades, but it's good to just see what I know for sure from watching all the stuff I've watched that Future Trader 71 does. I know for sure overnight high, overnight low, VPOX, middle of the day, and VWAP. Those are, and then the IB range opening swing. Those are exactly the kind of stuff that he pays attention to. And in my opinion, I don't think I've seen or heard a better trader than him. So if he's watching it, I'll watch it. But again, oil, nothing. I for a long time I was watching, especially when I didn't have any chance to trade because I was having to take care of other things, and it kept me away from the screen. So what I did, I tried as best as possible to just kind of stay informed. I would watch some other people's YouTube videos just to kind of see what the market did that day and hear their interpretations. And I did what I read whatever I could. The problem for me with reading is not to sound arrogant, but because of my trading career before, 90% of what I need to know, I know. And I don't like reading things that gives you a whole bunch of fluff information. Kind of like what I'm doing to you right now. It gives you information that does not in any way help you make money. So like I couldn't care less about that stuff. I don't mind being the dumbest guy in the room politically, economically, socially, although that's rarely the case, but I don't care about that. When it comes to trading, all I care about is what do I need to know that will make me money. So a lot of times when I would start reading stuff, and there have been some books that were pretty good, like that market profile stuff. That was pretty good by Stottlemyre and Dalton. But everybody that's ever done market profile will recommend those books. That was pretty good. Some of the videos I saw by Future Trader 71 and Cam Dadwar, also really good in terms of teaching volume profile. But I could kind of skip around. I didn't have to sit through and listen. I don't need to listen when they talk about trading discipline. It's something I know inside and out. Money management, risk management, patience. That's not to say I practice it well all the time, and that's why I'm doing what I'm doing. But there's nothing there that I need to learn. The concepts of volume profile. I had never heard of volume profile until about a year and a half ago, and I really I started looking at it around a year and a half. I don't remember exactly when, but I started looking at it. I didn't have a full grasp on it. I was fortunate enough that someone who also posts on YouTube, his YouTube handle is E-Mini Vapes. Really, really, really good trader. He's got videos you can go back and watch. Just like me, if he does something wrong, you see it. If he does something right, you see it. Admittedly, it's a lot more right than wrong. But watching him trade is what got me using these BBs as a source of information, right? So for me, I spent the year that I couldn't be in front of the screen. I just started kind of. I did have a chance to sit in front of the screen with his real name is Patrick, with Patrick for a while, but not nearly long enough as I would have wanted to. And fortunately for him, when we started, it was around December, and he had hit whatever his trading goal was for that year, and kind of stopped trading. So I didn't get as much time with him as I would have liked. And then as soon as the new year came along, and him and I had the chance to start watching the screen again, I had other responsibilities I had to take care of. So I haven't had the chance up until about 6 weeks ago. I haven't had a chance to get screen time to see all these things happen day to day. So it's great now to have this. It's great to see start looking at the ES. Because that's the first thing that'll happen. And while we're yapping here, we've had a nice push down. Again, not that there was anything here for me to look at as a potential short opportunity. Starting to have potentially some positive divergence if we come back down towards the low. We might even start looking at this bottom of the channel as a potential for scaling into a long. I don't like how far down we would have to go though for our entire scale. And it's actually only about 10-12 ticks. That's not too bad. It looks so much worse, because I have the chart stretched out to make these. If I made this chart just a normal size, all of a sudden now these candles are tiny. So I have it stretched out so that we can really see these candles better, even though they're so small in range. But so anyhow, um, putting putting in the screen time now this is really for me the first time I get to put into practice a lot of what I've read in relation to volume profile. You'll see I don't draw many Fibonacci's. Again, it's something. Then Fibonacci levels are not a hard thing to understand. They're a little arbitrary, like for me, I would draw a Fibonacci from here to here. Okay, but someone else might draw it from here to here. Someone else might draw it from here to here. Last swing low to last swing high. So I try to use. Now again, I have seen the Fibonacci's work. Like I'm sure if I were to take this here, if I were to take this drawing from here to here as it was happening, if you remember, I was just showing you that foot pattern. I'm sure this is going to be 61.8, 78.6. I know these are levels that when you're looking for that foot pattern in the BBs, that's a correlation that you're kind of watching for. But I try not to add too much onto my chart right now, above and beyond what I get from my homework. And the reason I'm doing so much talking is to avoid trading, because right now there's really nothing for nothing for me to be doing here. I can't tell you how many times I've wanted to just pull the trigger and say, okay, here's a long, here's a short, and every one of them, at some point, I'd be up 5 ticks, 6 ticks, be down 5 ticks, 6 ticks. There just hasn't been anything that for me to pull the trigger on. YouTube, I'll tell you, if you have the time to do it, I would strongly suggest taking a look at the videos from Futures Trader 71, some from Cam Dadwar, the ones from E-mini Vapes. I would absolutely be telling you to take some time to look through those, because these are all guys that do it and do it successfully. And not that you're going to be reaching out to a bunch of these people and trying to take their time, but it's part of becoming a trader is you have to invest time. So they've people like that, are generous enough with their time to put these videos up, to take their time to do it. It's on you to take your time to watch them, and if you have questions, maybe shoot them an email. If they have a chance, they'll answer. But you see it often enough. You see the same stuff. You see what they're looking for repeat over and over. You'll see it with me too, and it's you'll notice the days that don't go great for us are days that I do something I shouldn't be doing. It's rarely where a whole day's worth of trades are bad and you're following the setups like you're supposed to. Rarely is that the case. Rarely is that the case. Like Patrick trades the Russell, which is TF, so that's another market you get to look at. Remember, the reason I trade oil is because I'm very limited into the time I can put into trading day to day. So I really try to be wrapped up by 10 o'clock. So oil opens at 9, although now looking at the volume it has from overnight, honestly, I might start watching it even earlier. But oil opens at 9, so it gives me an extra half hour of full volatility to potentially to try to trade. The Russell, just like the E-mini and the Nasdaq and the Dow, open at 9:30. But that particular market, the characteristics of that market, might lend themselves better to you than oil does. And genuinely, I don't think I've seen someone trade the Russell better than what I've seen Patrick do. So watching him trade the Russell, and kind of starting to see what it is he's looking for. Those concepts stay the same across all charts, all futures. What changes are things like what's the size of the rotation. If you're using Fibonacci's in some charts, the 50% tends to hold better. The 61% tends to hold better. He has such a good grasp on the Russell that you can kind of learn that. You can kind of learn that from watching him too, and just be one other tool or one other contract that you can trade. The Russell's a much thinner market than oil. I don't remember. I haven't looked at it for a while, so I don't remember. Actually, I think let me pull that up since I want to show you what I mean. I don't have the newest contract loaded up yet, so give me 1 second, please. So the current contract is March 17th. So you can see the size here. Very few of them, until you're further from the market, are. I'll pull up oils as well, so you can see it side by side instead of me trying to guess any of this stuff. And what you're interested in, what we're looking at, what I'm trying to show you is size. See here where it says size, 68, 50, 140, 146, yada, yada, yada. 15, 7. So that doesn't make it better or worse. It just means that how many contracts would you be able to get into and out of easily if you were trading the Russell versus trading oil? So one of the reasons I like oil is because of the fact that it opens at 9. The other reason I like oil is because it is very liquid. I can get into a lot of contracts as I get better at this and should be in a lot of contracts. Right now, I have no business being in a lot of contracts. At this point, I can't believe I'm about to say this. I'm going to wrap it up, and I have not made a trade today. For some of you, that would probably feel like a failure if you did it. For me, that's a victory. There was nothing to trade today, and I traded nothing, and I have no problem with that. I'm actually very, very happy that I was able to stay patient. So, as usual, I will post this to YouTube. I'll get it out later on today. If you guys have any questions, just either comment there or shoot me a text, shoot me an email if you have that info. If you don't, I'm not going to put that out publicly. I don't know who ultimately these are going to be shared with, so obviously, to some extent, I'm going to keep that to myself. So, all right, you guys have a great day, and I will see you tomorrow.